Welcome everyone to Wealth Chat with the Trading Edition featuring Jennifer Black and Renee Rainey as
Hey
her.
everybody.
Hey, we're glad to be here. Jennifer and I talk mostly every day, and so the reason why we call it a chat because we'll start chatting about anything, investments, business, that we're coaches to the Kingdom Heirs. And we deliver some gems. And so we're going to let you in on one of our chats. So we were talking about angel investing. And so just to give you a good definition, an angel investor, and I'll read the definition. It's an affluent individual who provides, and let me move my phone out the way. That's what we got going on here right now. Capital for a business startup, usually in exchange for convertible debt or ownership equity. And so if you're trying to start a business or buy real estate, property for investments, it could be an idea. You could invent something maybe and need some capital. So it's almost like the show Shark.
Mm-hmm. It's pretty much the same thing.
Yeah. So I'm always saying that don't let money be the reason why you're not moving forward. And so, Jennifer, I'm going to give you the floor and talk to us about angel investing or investors.
Yeah, exactly. So basically, angel investing can be used one of two main ways, depending on which side of it you're on. If you're looking to, start your own business and you're looking for investors to come on, or the way that I'm actually, kind of more referring to, and that's what I'll kind of talk about in here, is if when, you as the investor want to invest in a company, a startup company. And so basically angel investing is a pretty broad term. It could be investing that could come from, family, friends. It can come from, wealthy individuals. It can come from investment clubs maybe that, get together and they want to, invest in some startups. It can come in the form, the one that I'm actually really mostly referring to and I kind of want to talk about is crowdfunding. There's a lot of different apps out there, a lot of different sites out there now that allow you to kind of get in the early days of, startup companies. However, the thing that I need to make, absolutely clear is that they are startup companies. So that means that they do carry a higher level of risk. So again, just like, we've talked about in previous chats, it's not something you want to just go and throw everything into. If you find something that you really like and you want to invest in, the company sounds like a great, idea, you believe in it, you do your research, and you want to invest in it, then great. But again, you have to keep in mind that it is a startup company. Therefore they don't have a track record, a long, standing track record. So it does carry a higher level of risk, but with the higher level of risk often comes the higher level of reward. So for example, some of the crowdfunding sites that they have out there nowadays, like there's ones called like Fundrise, which I do have, a small portion of money invested in Fundrise. They also have one that I've actually been kind of researching a little bit myself called startengine.com. And basically this is like Fundrise is for commercial real estate, but this other one is for, startup businesses. And just as an example, again, this is not a recommendation. It's just something that I'm researching, and I will most likely be putting in, a small amount of money to invest. There's a company, is called Hire Studios. It is a Christian-based movie studio. And again, they are a startup. And, some of these, with these crowdfunding sites, you can invest for a very small amount of money. Some of them are $100, a couple $100. But you're getting in the early age, in the early stages of the company before they've, gone IPO or anything like that. I mean, very early stages. So they can be very lucrative investments, but they're also more times than not long-term investments. It's not something where you're looking to, turn around and, pull your money back out, because a lot of like these type of things, it's not a liquid investment at all. You cannot turn around and pull your money back out. So it's just something, that you have to keep in mind, but, and then the other thing with the, one thing that crowdfunding has really opened up the doors for is previously, if you wanted to get in on some of these deals or startup companies or different types of like syndication, type deals, you had to be what's called an accredited investor, which means you have to have a net worth of $1 million or have to make at least $200,000 for the past 2 years in a row. You could only get in the game basically if you were already, fairly wealthy, or you had a fair amount of assets. But what's happened is now that there's some legislation that was passed, a couple of years ago that has allowed, them to do this crowdfunding where they can let the average Joe get in on some of these big deals as well. And that's been kind of a really neat thing for, people to research, to learn about, and, go from there.
Now, awesome, and I'm just I was taking notes, and I just want to back up a little bit just in case this is something that an investor is hearing for the first time, because you've been in it for a minute, and so just to back up a little bit. So we briefly talked at the very beginning. So if you are a person that has a startup business or you want to buy investment, but you don't have the capital, or you don't have access to be able to go to the bank to get a loan, there are angel investors. Now, what Jennifer is talking about today is that for those of you that are part of the book club, we kind of went over that in the book a little bit. He was talking about buying companies before they go public. But what Jennifer is talking about is that there are already companies, just like the shark. Usually, like if someone goes to the sharks and say, hey, I need a loan, and then if they don't have a history of making money, they usually get booted off the show. So Jennifer is talking about companies that are, when we say startup, it doesn't mean that that you're starting today. These are companies that have already gotten to a point where they have a proven record. They're small.
Yeah, and basically some of them are still pretty, I wouldn't necessarily say approved. I mean, they're not like they weren't started yesterday. Right. So some of them don't, I mean, they're all at different stages in their, you know what I mean? They're at different stages. Some are, a lot newer. Some of them have been in existence for a little while, but they really just lack the capital to really, take that next step. But the majority of them don't have long proven, track records. So that was the only thing that I just want to make clear, that it's, I mean, for example, if you're buying stock in Microsoft, the company's been around for a very long time. They're a great company. That, they do well. Some of these companies, they don't have that same kind of track record. And that's the main thing I just want to impress upon people, just so that they're aware of that the risk that can be involved in it.
And so there are places like Fundrise and Start Engine, where these companies can connect with to say, hey, we have something that it's a possibility that they'll take off. And like usually a company will go to an IP level to where They're seeking out investors, but this is before it gets to that point. So
Yes.
like a lot of
Mhm.
a lot of the buildings down in your downtown areas are owned by investors,
Mhm.
where they all come together. I mean, I know you mentioned syndication and
Mhm.
that sort of thing. So Jennifer is saying that, so say you don't want to go my route of being a landlord and buying commercial property, and that's still a
Mhm.
landlord where you're renting out that space, but you have some money and you
Mhm.
can do it as low as is that $100 a month, or is that just I could take
Uh,
$100?
It just depends on which, like if you were looking at like the startengine.com, for example, those are specifically businesses.
Okay.
And some of them, yes, you can start, as low as like $100 to get in, or a couple hundred. Each business has their own, criteria. Fundrise is something that one isn't, that one specifically for commercial real estate. And that's another point actually that, thank you for reminding me, from the real estate perspective. What it is like, for example, like Renee said, if you don't want to, be that landlord, you want to be a completely passive investor. Now, you could look at something like Fundrise. They invest in commercial real estate and it's crowdfunding. So people can, there's certain portfolios, a starter one, I believe, is like $500 to get started. And then there's 1,000 for if you want to go into one of their, I think they call them their core portfolios.
Now, is that a lump sum that I give, or is that
The
a
lump sum to
complete?
start it, and then you can either just leave that in there, or you would, invest monthly, whatever schedule you want. But there is a minimum of either the 500 for the basic, or 1,000 for one of the core portfolios. They pay you quarterly dividends. You get appreciation gains, when they sell, one of the properties. But one thing that now, if you were to go the route of going into your own commercial real estate property, or basically any type of real estate, your returns are probably, in most cases, from what I've seen, going to be a little better. But one thing that I do like about Fundrise, and the reason that I signed up for, and like I said, I just, started with the minimum, the core portfolio. The main reason that I did it is because, like, you're talking anywhere between 9 to 12, 13% returns a year is what they have. Now I can definitely do better than that, in the stock market most of the time. But the reason for that I really like is because what I found is through their platform, they will give you updates all the way through, like when they're getting ready to buy a property. They give you all of the analytics behind it, why they're buying it, the area of it, what's going on in that area that they feel is going to be a good investment, what their expected returns are going to be. They give you progress updates throughout, if it's something, whether sometimes they're building a property, they're building an apartment building complex. Sometimes they're buying an existing one and they're just renovating it. They've got several different, sometimes it's warehouse, or I'm sorry, storage facilities, their office buildings. There's just so many different types of projects that they invest in. And then they also provide you that update when they exit, when they, and they tell you what the return has been throughout the life of that project. So what I like it for is, I currently have not yet invested in commercial real estate, but when I do, this right here using Fundrise has really helped me to kind of see how it works from start to finish, what kind of things that they're looking for, things that happen, along the way through the project. For example, they even had one project, it was a smaller project, thank goodness, where I think it was an apartment. If I remember correctly, it was an apartment building where the contractor, they were building it. And Fundrise had they were a preferred investor, meaning that they get their money back before the contractor is able to make, any money off of the property, which is, pretty good, because if something goes wrong, they get it's a safer investment. Fundrise is going to get their money back before the contractor makes anything. Well, in this case, when they went to sell the property, apparently this contractor didn't do that. they didn't pay Fundrise first. They said that, I don't remember the exact wording in the paperwork, but basically they screwed Fundrise out of the what they were supposed to get. So then Fundrise updated us all throughout to show exactly, they hired lawyers, they got lawyers involved, and they filed a suit against this contractor. Now they ended up getting all their money back, but it was nice to see that entire flow of communication so that you can see, okay, so when the time comes and I go ahead to do that, okay, I remember when, so it just, that's something that I really like it for, is, for that learning curve. And then of course, if you never intend to get involved yourself because you completely want passive and no hands-on, it's a great opportunity for that too, so.
No, I just jump in and thank everyone for joining us. We have Jennifer Black and Renee Rainey here, and we're just having a wealth chat. And we're talking about crowdfunding and angel investing. And just to, again, break it down, we're just giving you some other options to consider as far as investing. Even like I said, if you don't want to be a landlord like me, but you do have some money that you would like to invest, because it's when you invest your money is when you build your wealth.
Mm-hmm.
And so now one of the key things that Jennifer says, so say if you had $500, well, she said you could do it as low as $100 as well.
Mm-hmm.
But say you took $500, you put it into this one of these support one of these companies that is starting up, whether if you do the Fundrise, which is real estate, or you do the Start Engine, which is startup businesses. She's saying that you can't come back next month and have an emergency and say, hey, I need this money back.
Exactly.
It's long term. So
exactly.
that's something to consider. Now, let me
Yes.
ask you this. You invest the $500 for a period of time. So say 5 to 8 years.
Mm-hmm.
We'll just throw that out there. Are you receiving interest along the way?
With Fundrise, yes. So we receive, you get capital gains, at the end of the year, from, the appreciation, from any properties that sold, that had a gain on them. But then you also receive dividends throughout the year, each quarter. So you do get that. And they do have, like, for example, Fundrise has a redemption time frame. It's, I think it was once or twice, or it might be once a quarter. If you needed to take money out, you can. However, during this whole, COVID situation, they did suspend the redemptions, because what they didn't want to have happen is everybody rush in to try to pull their money. And then, obviously that's a big problem. So they did, and they do have within the, when you set up your account, that they, they have the right to do so. So you just have to really, really understand that that's not money that you can, it has to be, extra money that you're not planning on having anytime soon.
And that's pretty standard, because even now you have a lot of money in the bank. You can't just run and take all your money out. They monitor that. And also the stock market, they have it so, and Jennifer's a better pro at the stock market, but to prevent a total chaos happening in the stock market, you can't just go and, because there's companies also buying, and so they're not just going to sell their whole portfolio all at one time. But if they are going to sell it, they're going to do it slowly versus largely. So if I invest $500, I'm receiving a quarterly interest rate. So at the end, and I'm just thinking about a deal that I was involved with. I put money in, 5,000, I think it was, and then I got interest. And then at the end, I got my money back plus, so I got interest along the way and I got my money back. But then another deal, you put money in, you get interest along the way, and then they're planning to sell the business at the, or building at the end. So we split that profit at the end. So there's different terms for different packages that you take advantage of. And the other thing I wanted to mention is, And Jennifer, I may give you the floor because I lost the thought. But oh, what I was going to say was this: as a landlord,
Mhm.
yes, I make the bigger profit. You talked about I make a better percentage, but the thing is, I also have the day-to-day management of the property. I
Yes.
get the phone
Yes.
calls.
Yes.
In this case that you've mentioned, I would have been involved in the lawsuit, you know. So this gives you an opportunity to say, hey, I want to get into investing in real estate, but I don't want the headaches of a landlord. And what happens is, and which we're going to get good at this, Jennifer, we're going to do so many deals that it became a business system that we talk about on the quadrant. You know, that's on the right side, to where they have it so down packed that even if they fall into a situation to where the person reneged, that they already had their attorneys in place, they already knew what they had to do. You know, that's a business system that's established, to whereas, you know, you're not worried as an investor, and they're really not worried either, because they've done it. They have the right team in place, you know, and you're able to make money, they're able to make money. And so we're going to try syndication one day. I'm speaking it out there.
Absolutely. Absolutely.
But yeah, I mean, for someone that doesn't want the headache, but still make a percentage. And once you make money, you're going to be a repeat customer. So that's something to think about.
Yes, absolutely. I agree. Yeah, we've talked about the whole, you know, syndication process, and that's definitely a great big goal in the road. Definitely.
It is. So guys, again, if you have any questions, whenever we do place a video here, the conversation doesn't have to end. If anything that you've heard that you liked, and you know, Jennifer, definitely reach out to her. She can provide you. We have to see if they have an affiliate program, Jennifer.
Oh yeah, yeah.
So that we can get a link or code for our members. But so yeah, thank you guys for joining us. If you have any questions, please, if you like what you heard, like it. You know, give us a like, give us a thumbs up. And if you know others that would benefit, please share this information, share the video with your, you know, or tag people in, and they can come and view the video. And subscribe to our channel if you haven't done so already. And this is a weekly thing with Jennifer. So yeah. So thank you, Jennifer, for sharing crowdfunding with us and explaining it. And we talked about syndication. You gave us some, how do you spell fundrise? Is it Fundrise?
Yes. Yep.
Okay.
Yep. Just
And
another,
so, yeah.
just a quick note too, and if there's any sort of topics, you know, that you would like us to cover, or, you know, you're interested in, then feel free, definitely leave that in the comments, you know, give us some ideas if there's something you want to hear about, and, you know, maybe we haven't, you know, thought that, you know, well, maybe everybody would like to hear that.
Yeah, and you talked about the movie company. Did you have anything else you want to add to that?
Just that it's called Hire Studios. It's not something that I have invested in right now, but it is something that I'm researching and that I believe that I will. Again, you know, it's just what I'm looking at doing. I'm not telling anybody else to do it. You know, just like we always say, do your own research. But we just basically wanted to shed some light on, you know, there are so many different things that you can invest in. You know, there's so many different ideas. There's different, you know, ways to go about it.
Yes. Yeah. So you can still get in and make money, and that's the key thing. We're not making any recommendations, but we're just broadening your knowledge on what's out there and available to you. So
Yes.
Thank you, everybody. And maybe our next chat, I don't know if you want to slide it in now and talk about Kodak real quick.
Oh, okay. Well, yeah, I can make a mention on that. So uh, recently, the latest news in Kodak is that a hedge fund bought I believe, I don't have the numbers right in front of me, but I believe it was like little over 5% stake in Kodak, this hedge fund. So it made it went up 20, what was it? I think I told you it was like 25%, 20 something percent yesterday anyways. It didn't really do much today. So I'm not exactly sure, what is behind that, but apparently this hedge fund sees some value in the company. I don't know if maybe they know something we don't know, but
We're in, right? We're in. Okay, well,
Yeah.
thank you, everyone, for joining this conversation, and bye for now.
Good night.